The state of California is taking steps to protect homeowners in fire-prone areas from getting dropped by their insurance. Sounds good in theory, but some people are concerned that the plan might have a major impact on the overall cost of home insurance. ABC 10 News reporter Danny Miskell explains the changes and why some are calling it a bad deal.
If you live in a fire-prone area, you're lucky enough to even still have full coverage on your home. Well, that's why the state has come up with this plan. They're trying to expand coverage for homeowners while also stopping homeowners from getting their insurance dropped. But one insurance advocate that I spoke with told me all this plan is going to do is increase premiums for homeowners by 40%.
So this is a bait and switch.
Jamie Court with Consumer Watchdog has been a consumer advocate since the 80s. He has major concerns with the state's new plan for wildfire coverage, and here's why. According to the Insurance Commission office, the state's new regulation would require insurance companies to increase coverage in high-risk areas. According to the proposed rule, insurers will have to start increasing their coverage by 5% every 2 years until they hit the equivalent of 85% of their market share.
That means if there's 0% coverage in a wildfire area now, in 34 years, they will get to 85% coverage in wildfire areas, which is what the commissioner promised initially.
According to the insurance commissioner's office, in exchange for increasing coverage, the state will let insurance companies pass on the costs of what's known as reinsurance to California consumers.
This is a terrible deal for consumers, and it's one that's going to leave us all paying more for insurance, 30–40% more for insurance, at the same time as it's not going to guarantee people in high-risk wildfire areas the coverage they want.
Court believes this plan will make wildfire insurance too expensive to afford. He claims it's based on unproven factors like climate risks.
San Diego was a model for wildfire prevention. There's no reason these companies should be asking for these types of rate increases or getting these types of concessions, because we are taking the precautions as a state.
Insurance Commissioner Ricardo Lara says this regulation will reform insurance coverage for Californians, giving homeowners more options while limiting costs. He also believes this will hold insurers accountable and promote a consistent approach to assessing risks for consumers. Court disagrees and feels the state should be taking a different path forward.
It's requiring companies that want to do business in the state of California to issue insurance policies to people who take the time and the money to fireproof their homes and harden their homes against fire.
And Court says Consumer Watchdog is going to try and put a stop to these regulations. They're even going to take them to court. He says they're going to do it on the basis that these insurance companies are being allowed to raise rates without being fully transparent with its policy holders. For ABC 10 News, I'm Danny Miskell.